Multi-let industrial units, it's concrete floor, portal frame, cladding, that's it. There's no lifts, there's no air conditioning, there's no heating, there's none of these things that require a whole lot of maintenance. So you're not paying out loads and loads of capex every year or every few years to renew the unit. We currently own approximately just over 4 million square feet of MLI space. We have over 1,000 tenants. The rent is approximately £5.50 per square foot on average, whereas in the average high street you're probably paying about £30 per square foot. A total dividend for the year of 6.75. This is nicely covered by the 6.79 of property-related earnings. Our total earnings of 8.84p were slightly down on last year, approximately 2% down, and that was primarily due to the fact that we had decided as a deliberate strategy to take our leverage down, which dampens earnings. We're experiencing rental growth of between 4 and 5% per annum underlying rental growth on our portfolio. As we've shown, we can still find opportunities to buy. We bought £100 million of multi-let industrial property in the last year. We hope to buy another £100 million of MLI property this year. We're very confident that we should be able to buy them at yields which comply with our models and our criteria, where they're earnings enhancing. So far we haven't had any difficulty, and we're confident that we'll be able to buy them at those prices. The thing that really attracted us to the multi-let industrial space is the structural change that's going on in demand for these units. There's a whole new range of occupiers who are wanting the space, to use the space, and they've all been enabled by e-commerce and communications technology. A good example would be Deliveroo. Deliveroo didn't exist 5 years ago. It only exists because of the internet and the way you can order on the internet and the way it's all set up. Their most popular restaurants in each town are not coping. And so what they've realized is they can actually take one multi-let industrial unit and they can fit it with 5 kitchens, go to their 5 best restaurants in that town, offer them for a chef to come and work in that restaurant, and have all the deliveries taking place from there. And on the supply side, what you're seeing is very restricted supply. These units all have to be in and around densely populated areas. They can't be located on highways in the middle of farmland. If a piece of land becomes available in a densely populated town or city, it tends to go for residential rather than multi-let industrial. And if it doesn't go for residential, it's more likely to go for a single let. It's much, much cheaper to build one single let industrial unit of 30,000 square feet than it is to build 10 3,000 square foot units. So supply is really restricted, and as a result you're seeing quite substantial growth in rents. We're the only listed company that is focusing on purpose-built multi-let industrial. Our intention is to become 100% purpose-built multi-let industrial. We hope to achieve that by March 2022. We're very disciplined in what we buy. We will only buy purpose-built multi-let industrial units where it's been designed, where each unit is a certain size, you come in through the gate, it's an estate, it's controlled, and we'll also only buy it if it's in and around densely populated areas, cities and towns which are growing economically.